Welcome to another episode of Better Business, Better Life. I'm your host, Deborah Chantry-Taylor. I'm passionate about helping entrepreneurs and their leadership teams get what they want out of business and life. On the show, I invite successful business owners and expert speakers to share their successes. They are open and honest about the highs and lows of business and also life as a business owner. We want to share those learnings with you to inspire you, but also to help you avoid some of the common mistakes. My hope is that you take something from each of these short episodes that you can put into action to help you get what you want, not only out of your business, but also your life. So good morning and welcome to another episode of Better Business, Better Life. Today I am joined by Murray Phillips, who is a colleague of mine and we do a lot of work together. Murray is a chartered accountant, he's a business advisory specialist, and he has a business called Insight CA, but he's also just about to launch, in fact probably will have launched by the time this comes online, a new business called Cash Out Catalyst. And Cash Out Catalyst, from what I understand, is all about working out how you get the most money out of your business when you're ready to sell it. Is that right?
Yes, correctly.
Yeah. Brilliant. So welcome, Murray. Good to have you here.
Thank you very much. Thank you for the opportunity.
Oh, absolutely. Looking forward to having a chat to you. So we're going to talk today about exit strategy and planning and what that looks like. But before we do that, I would love to just hear a little bit about Murray as the person. So if you could share with me a professional and a personal best from your life, that would be really helpful.
I think as a chartered accountant, it's all about helping those around you. We go into business and we know a specialty or a trade, but we don't know everything about running a business. Mm-hmm. And it's trying to educate the client or potential client to understand that there are professionals out there that are out there to drive your business forward. Mm-hmm. So that's where Insight CA comes in as a business advisor. Yep. And following on from that, that's where Cash Out Catalyst will come in and helping you to exit your business.
Yeah. So that's what you love to do from a professional base. What about personally? What do you love to do outside of work? What's been your personal best in your life so far?
Well, pre-COVID, it was I used to enjoy swimming and going for walks. Swimming is off the agenda at the moment.
Yes.
But then I've got 3 grandchildren who I like to spend time with.
Oh, excellent. Okay. Where are they? Here in Auckland?
One's in Auckland and 2 in Rotorua.
Yeah, brilliant. Okay, cool. So we are going to talk a little bit about exit strategy and plan. But before we do that, I'd love to hear your story. So how did you get into accounting? Why did you get into accounting? Because to me, that feels like a job I could never do. And then obviously it's morphed into kind of business consulting as well. So tell me a little bit about your history and your story.
So I'm one of 5 boys in my family. We owned a farm. My father was blind, and so we had to exit that. We left it and we went to live in town and then on to boarding school. But in my holidays, I used to go and work for the chartered accountant, and I got a feel for it because initially I was going to leave school and I was going to be a school teacher.
Okay.
And I decided, no, there's too much stress with that. So had to find another avenue. I then said, I'd like to be a chef. And then I said, no, all chefs are fat. I'm there already, so let's go into a profession, and accounting was it.
Okay, and you've obviously been working with a lot of clients over your time. What's the biggest challenge that you see with most businesses that you work with? Is there a common theme?
Yeah, they all go into business, and they typically go in and fundamentally, when you understand it, they've brought themselves a job. Yeah, right, and unless they actually surround themselves, get the expert advice to help them grow their business, they won't have a business to sell when they exit. Yeah. So one of my slogans in the Cash Out Catalyst is don't let your lifetime work retire with you.
Love it. Yeah, that makes so much sense. And it is really interesting, as I know I certainly have experienced it, is that people don't start thinking about preparing the business for sale until they're actually ready to sell it. And that's generally 3 to 5 years too late because you need to put the work in beforehand. To get the best possible value out of it.
So one of my sermons that I preach is the day you start your business is the day you start to plan your exit. Okay. Right? Because at the end of the day, when you're going to exit, you don't know, are you selling it to your family, which has one sale price? Mm-hmm. Are you going to sell it to your management, which is another selling price, or are you going on the open market? Yeah. Each of those have a different philosophy, but you've got to be in there to start with. Systemize the business. The business can't be about you. Yeah, it's got to be about a brand or a product or a service, but not you. Because when you go to retire, you typically just close the door.
Yeah, that's fair enough. And I suppose, because I often think we may not go into business thinking about the fact that we're wanting to sell it, but it isn't just about selling it. It's about actually how do you get yourself out of it when you're ready to get out of it.
Well, the thing is, so often you could have the unforeseen circumstance where you have a heart attack, you have a stroke, whatever, you have a major car accident. How do you get out, right? You haven't planned, right? So not only would insurance help, but if you had a strategy in place to start with that was documented and was, reviewed by your chartered accountant and your legal team, then the way forward is fundamental.
Okay. So what do people think to think about when they're thinking about an exit strategy as such?
And part of the theme of Cash Out Catalyst is all about, Cash Out Catalyst is being launched as a 3-stage educational program, right? It's all about systemize your business so someone else can actually do the work, right? So in other words, that will take you probably 12 to 24 months. Every system, every process has to be documented. And it's got to be documented in such a way that I could walk in and I could, as a mystery shopper, step into your shoes and do your work, following your process. Right?
Excuse me for a second. We have a couple of dogs in the podcast room this afternoon. Or you two. Thank you.
Okay, and then having systemized your business, you need to fundamentally have someone come out who is not engaged in your business, come in and see if they can actually understand them and follow some of your processes and fine-tune them.
Right.
The second part of that strategy within Cash Out Catalyst is replace yourself. Right? So the idea is that you as the business owner are so engrossed in your business that your staff become order takers. Right? What we've got to do is we've got to change that philosophy, and that will come through systemization so that someone else can pick up and do your tasks, and that you change your whole philosophy so you do what I call work above the line. In other words, you as the investor should be looking for ROI on your business. You engage a manager and he works below the line, and he's all about supervising the employees and getting the production through to satisfy you as the investor. Right? So there is a process there. So the objective of replacing yourself is that you can still work in the business, but you're not the key focus, that you can go and take 3 or 6 months off and come back and find that the business is run fundamentally as good, if not better.
Most often better, I must admit, but yes.
Better. Hey, if it runs better, systemization's working, and you're ready for sale.
Fantastic. So what's the third part?
And the third part is what I call record. So it's all about, first of all, get your key metrics in terms of financial performance, get them reviewed, because you've got to get them in such a way that the buyer can see the results. So you don't have them to suit yourself as management accounts, you have them buyer ready. So you take out all of the personal expenses of the business and personal expenses. It means you're going to pay more tax, but at the end of the day, it gives you a better return on investment when you apply a multiple. So you record those. That can take 3 or 4 months. You want to do it inside a financial year, and then you want 2 or 3 years of improvement after that, because you've got to show the investor what are the improvements that have been made. So not only is it financial numbers, at the end becomes all the, should we say the non-financials, all the metrics about your CRM system, how well is that performing, how is your staff performing, what's your hit rate on your website or any other social platforms that you're on. And it's getting all of those metrics. So they're non-financials. And from there, and that you've got to show systems improvement all the way through, right? And it's no good coming to us today to say, hey, I want to go to the market. If you come to us now and say you want to go to the market, you're a real estate transaction, right? So you've got to plan it, as Deborah said, 3 to 5 years in advance, and better still, start planning the day you
The
start
days of
your
the business. Yeah.
because you don't know when you're going to, if you should be unfortunate to have an accident,
Yep.
how do you get out?
Yeah.
Right?
Well, it's more than that because, like you said, it's sort of for you want to have an asset that has some real value by the time you choose to retire. Retirement could be at 40, 50, 60, 70, it doesn't matter.
Yeah, with today's technology, and shall we say the computer geeks,
Yep.
the technophobes, they're bored within, as soon as they've got a product launched and it's operating, they're bored. They want out, right? And then they're on to the next venture. So no, it's not age restricted. It's shall we say maturity of the business. When the business is ready,
Yep.
You should be ready.
Fair enough. So what are the common pitfalls? What do you see in the businesses that you work with that mean that businesses just sort of plateau and don't move beyond where they possibly could?
Typically, they haven't had a chartered accountant or business advisor actively involved.
Yep.
They consider it an overhead. Well, my answer to that is if I'm just doing a tax return, I'm an overhead. But if I'm actually helping you grow your business, I'm an investment because I'm actually helping you grow your turnover, your profitability, and the overall wealth and well-being of your employees as well.
Yeah. So to be fair, though, there are definitely accountants out there who are just about, doing the legislative stuff, the stuff that needs to be done.
Yeah.
Then there are people like yourself who actually add some value around that as well. And I actually call it management accounting. I remember when I used to work in big firms, you'd have a number of different types of accountants. There'd be accountants who were there for the legislative part of it, make sure it was done. And there were those who were producing the numbers that could actually help you make informed decisions.
Yeah. So if I go into a business, one, I will look at the numbers. But I want to understand the health and well-being of the business owner. Yep. Where is their psyche? And, a good walk around the premises will actually also tell you beyond what the numbers tell you. Is the place clean and tidy? Is it orderly? Could someone walk through it? Could someone do a stock take? You look at things like, if we're talking inventory, there's a dusty pile over there. So is that obsolete? Should it be in the business? Why not write it off? Because one, there's an overhead carrying it. Two, there's an overhead in rent. Three, there's an overhead and you could, in terms of you could have used that money elsewhere. You might break even on it, but it's what I call the circular flow of cash. You got rid of it, it tidies up your balance sheet and allows you to use that money again.
Okay, fair enough.
So I go in as what I call, I offer a sounding board solution. So for my clients, yes, I am their chartered accountant, but they don't make informed financial decisions or even HR decisions without saying, hey, Murray, what do you think of this? So I bring a different perspective to it to say, have you thought of this? Have you thought of that? And then allow them to make the decision.
Okay, so I want to be able to share some experiences with the listeners that they can actually, look for those pitfalls and understand where they might be going wrong or what the little things they could be doing to improve what they're doing. Obviously, yes, there is, not getting somebody involved like a chartered accountant or a business advisor kind of reasonably early on has a massive impact. What else have you seen that because I know from my experience, not so much now because I'm dealing with much bigger clients, but at the ICE House, when I was working with smaller clients, I had clients who never looked at their accounts. They had a zero and they didn't even look on a weekly basis, yet alone anything more than that. So they just would wait till the end of the year until they got their accounts back, and then they go, oh, it wasn't a great year, or oh, it was a good year.
So is
that still common?
Yes, it is. And when I take on new clients, or before I take on clients, I want to understand their financial literacy. And the idea is if it's low, part of my process of educating them is to do that. Management accounts are something, but unless they understand what those numbers or how those numbers were generated, it means nothing to them.
Yeah, it's true.
It's what I call allowing them to make an informed decision with financial backing. Right.
I used to call it loving your numbers. I said to them, you should love this stuff. I mean, I'm not an accountant. I don't particularly love numbers, but I love looking at the numbers of the business because it gave you a really good indication of where things were going, and not just the financial numbers, but like you said, the other metrics and things that we measure as well.
So what I say to clients and prospective clients is, if you're reading your financial numbers, you see the same clutter every day. I come in as an outsider and I'll pick numbers. I'll say, oh, there's a trend there that's wrong.
Yeah.
Why, and then we'll investigate and explore it.
Mm-hmm.
As I say, you're seeing your numbers day in and day out, and you can't see the obvious.
Yeah, no, that makes perfect sense. Okay, what other things do people do that
I found
hinder them?
Yeah, I did a due diligence process where I was part of the selling process, right?
Yep.
And there, it's all about communication.
Mm-hmm.
So we were owned by a relatively wealthy person here in New Zealand. He decided to put our business on the market for sale.
Yep.
He hadn't informed the managing director of my company, right? And he lost a lot of money as a result of it. Now, the reason he lost money was he didn't tell us he was going to put us on the market, because we could have told him what was lying around in terms of profit, right? At that time, we had $1.5 million tucked away in the balance sheet, which, had he known that added to the value of how profitable the business was, he could have asked for a higher exit price.
Yeah.
So it's all about communication. You don't have to be that public, but at least inform your MD and your finance person that, hey, this is what we're thinking of doing. So that was a costly mistake.
Yeah. And I also find that, sometimes by doing that as well, there are sometimes people who are in the business who might be the potential buyers.
Totally.
Yeah. Think about management buyouts. That happens quite a lot. So actually, first of all, good to get them on the same page so they know what's going on, get them on your side, get them helping you, but potentially they might actually go, hey, we could be interested in actually taking this over. Yeah. Yeah.
So, if you're getting yourself into that scenario, it's all about how healthy and how clean is your balance sheet in your premises.
Yeah.
Right? As I gave you an indication, stock is a big one.
Yes.
Too often people buy stock and think they've got to hold 6 months worth of stock. Pre-COVID, if your supplier was in your local jurisdiction, why are you holding 6 months stock? Why don't you change your philosophy and get down to a just in time? In other words, you're holding, say, 6 weeks stock maximum, not 6 months.
Yes.
That has a huge cash injection to the business if you can change your mindset.
Yeah. Of course, COVID has relatively stuffed that one up, though, hasn't it?
Yeah, it certainly has.
So I've got a few clients who are, big importers, and they have literally had to almost quadruple their kind of stock importing at the moment just to make sure that they're actually able to supply. And it's worked in their favour, because it means that actually when people have wanted to buy, others haven't had that stock holding and they were able to supply it. But it has a huge cash impact on the business.
I'll have to change my example going forward.
No, not at all. No, because I know. I mean, it still makes perfect sense, and I still think. I mean, it depends. That's importing from overseas. That's got additional kind of consequences. But yes, if the person's just down the road, it's a local supplier.
Well, you take a technology company, retail, and a fashion. Why are they constantly got sales?
Yes.
It's seasonal. So it's fashionable for 3 months or 4 months, and then it's a change of season.
Yep.
So if you can reduce your stock carry in terms of how long you're stocking it, as opposed to when are you getting it just in time, it has a huge impact.
Yeah, that's true. Okay. So tell me a little bit about the Cash Out Catalyst. So where did that idea come from, and what does it look like in terms of if somebody was interested in finding out more about it? What does it do?
So Cash Out Catalyst, when we launch within the next month, which is likely to be the month of May, is all about helping business owners be informed so that they, as we say, don't let your lifetime's work retire with you. So it's taking them through that educational process. Some of it we would do and some of it we would outsource, especially things around systemization. But where it started was that, as I said earlier in the podcast, I was one of 5 boys. We had a farm. We had to move off it due to my father's loss of eyesight. And then over time, we decided we needed to sell it, right? And it's a case of how well was he informed about getting it ready for sale, right? You can talk stock capacities and anything like that, but financially, was the numbers ready? They weren't, right? So it's, and I found, or I consider, that we left a lot of money on the table that we could have got. So I've always looked at that, and then I've given you the example of one of my clients who actually lost a lot of money or left a lot of money on the table because he wasn't informed. So I thought, no, business owners need to be informed.
Yeah.
Too often they buy themselves a job,
Yep.
and it's at the end of the day they close their doors. They don't consider the situation of maybe outsourcing a lot of the non-functional work that they do as a paperwork, right? That could quite easily be apply or sent to a VA to do, and that you concentrate on your core activity. I give an example, rightly or wrongly. Should I, other than for exercise, should I mow my lawns, which will take me an hour and a half and cost me $60, or should I be out there selling my services and maybe get $300, $400, $500, right?
Yeah, I use the same example around cleaning as well. I mean, I actually say I'm half German, so I'm an excellent cleaner. I really do an amazing job. But in reality, it's something I don't enjoy. I quite hate it. And it's a 25-hour, what we call $25 an hour job. Whereas, yes, if I had those 3 or 4 hours to myself, I've got two options. First of all, I could probably generate several $1,000s, or second, I could just have some time. And let's face it, time is one of the most important assets that we don't get. It's a limited resource, and so sometimes even just having that time free is worth it. Yeah.
So if I give you an example, like I've got a client whose name, we're going to use the name Paul.
Yep.
So Paul started his business 6 years ago. He works 70 odd hours a week in the business.
Right.
He's, shall we say, a control person.
Control freak. Yeah, we have a few of those, don't we? Yeah.
So in other words, he's the order taker, he's the invoicer, he's the quoter, etc. Right?
Yes.
He doesn't feel as though the business can do it any better than he can do it. So he hasn't got in his eyes, the support of his employees. He's at a stage where 6 or 7 years into the business, he knows that within 8 to 10 years, he's going to retire.
Yep.
He's tired. He's often caught having 40 winks at the desk. Right. He's working 6 days a week.
Yes.
Right. So I had to go in there and explain a few things to him about exit and risk. And quite quickly, he saw that by engaging a new employee or one of his existing employees to do the follow-up calls from his sales calls, that he started to get confirmation of sales orders. He was just too busy
to do that stuff,
to do any follow-up. So there was no follow-up happening, right? So he did that. We engaged a draftsman, as opposed to having one outside. We put one inside, and he did drafting and quoting. So now this client, Paul, has gained a day a week that he can now either spend with his family or work on the business, right? So the next part of that process is he needs to start delegating, which he has done, his financials, right? And understand, because in 8 to 10 years, he's going to retire. And so the business is a major form of his investment. And we need to make sure it's sale ready.
Yeah.
Right?
Fair enough.
Profitability, because he's delegated to someone to do the sales follow-up, turnover has increased by 40%.
Wow.
And his GP is risen by a minimum of 5, all in the space of 12 months.
Yeah. And all just by getting some help.
Yeah, it's all about letting your employees take control. Instead of them being order takers, they can make informed decisions themselves.
We call it delegate and elevate, and it's basically around, making sure that you are elevated up to the things that you are really good at, really great at, and love, and allow other people, because there are people who actually enjoy doing that $25 an hour work and are actually quite good at it. Whereas when you're doing it, not only is it a waste of your financial resource in terms of what you might charge out, but also you're in that real negative kind of space of, I hate doing accounting, I hate doing invoicing.
In Paul's case, it's a case of, he was doing too many functions because he didn't believe that the business could survive without him.
Yeah.
So you've got to get him to a stage where he could take time off. And as we say, if you can get to 3 to 6 months without actually having to pick up the phone, that's
when you've got it cracked. Yeah. Okay, cool.
That's the philosophy of a Cash Out Catalyst.
Yeah. Perfect. Okay. So that's going to be online. And so the website address for Cash Out Catalyst is
www.cashoutcatalyst.com.
Okay, that's pretty simple. We'll have a look at that. So 3 top tips, like if you had to give something that the listeners can go away and do straight away, what would be the 3 top tips you would say to business owners? Generally, our listeners are established business owners, so they might have somewhere between 10 to 250 staff, but they're still looking to the future and what they can do.
Okay. Employee external advisors, whether they're accountants or lawyers or EOS consultants, and drill down, go away for a weekend and sit down and challenge everyone about where is the business going.
Yeah.
Okay. You can't be the single voice of the business. Mm-hmm. It has to have a team environment. If you don't bring the team into it, they're not going to buy your decisions going forward. So
it's all about what EOS is about, and it's really interesting. I was just talking to an actual client of mine on a podcast a little while ago, and she was saying that it was her husband and herself initially doing everything in the business, and when they brought on the team members, it meant that the team was, knew what was going on, felt like they were part of that decision making, but it also means they haven't got all that stress all on themselves and only themselves.
The fear there is the fear of letting go and letting employees know some of your financial information.
Yep.
They don't need to know everything. They just need to know what are the drivers that affect their side of the business.
I also find, and this is just a mass generalization, but in most businesses, they're scared of showing the numbers because they think employees will kind of go, that's how much you earn. Yeah. But in actual fact, most of the time, they actually think the owners make more money than the owners actually do. Totally. And when you start sharing those figures, it becomes okay, I didn't realize that it wasn't as good as that, because they just look at the top line figures and go, we're turning over $20 million. We should be millionaires. When they look at the bottom line, it makes a bit of a reality check.
Totally. I support that.
Yeah. Okay. Yep. Number 2. What's number 2?
Start early.
Yep. So you said early on, really the day that you open your doors is the day you should be thinking about what you're going to do when you close those doors.
People might think that's a bit weird, but hey, at the end of the day, there's basically 3 buyers out there, right? Is it your family?
Yes.
Who typically don't want to be in the business, but they're looking at the goodwill of their father or mother and taking the pass over.
Yep.
Is it your management, or are you going to the open market?
Yeah.
You got to be ready, because if you're not ready, you're a real estate transaction.
And if you think about it, all of the best business books, Stephen Covey, 7 Habits of Highly Effective People, it was all about start with the end in mind. Yep. So know where you're headed, and then it'll become a whole lot easier getting there. Okay, perfect. And number 3?
It's all part of the same, but I think it's, start systemizing.
Yep.
And basically you want someone to come in as and I'll use the term mystery shopper.
Yes.
You want the mystery shopper to sit in your administration area, and then your sales area, and then in your production area.
Yep.
And tell you as an outsider where it's performing or not performing.
Yeah.
So you've got time to correct it, because at the end of the day, what they see is what a buyer sees. Mm-hmm. You've always got to position yourself as not what you want to sell, it's what is the buyer wanting to buy.
Yeah.
So, and they're quite different.
True, very true. Okay, perfect. So if people want to get in contact with you personally, what's the best way to get hold of you, Murray?
I have 0800 cash out.
Okay, yeah.
And or pre-launch of Cash Out Catalyst as a company, then Murray at insightca.nz.
Lovely.
Happy to chat to anyone.
Yeah.
Because sometimes it's just guidance. Have you thought about this? Have you thought about that?
Yeah.
And go from there.
It's the power of that external person. I find it's often that we are so caught up in the weeds and the day-to-day firefighting that we just can't lift ourselves out. Yeah. And we're very fortunate as people who come in from the outside. We're like a coach, right? Totally. We're actually able to watch what's going on the playing field. We are able to take our experiences from other businesses and ask. I don't tell people what to do, but I ask the questions. Totally. So that's interesting. Tell me a bit more about that. Or
and I was at a recent networking meeting where the business broker said that 90% of businesses don't sell.
Yeah.
Right? Wow. And that is because
there isn't anything to sell.
There isn't anything to sell because the brand is the individual.
Yeah.
So never start a business using your personal name, because your personal name carries with you and doesn't really carry with the new owner.
Yeah, it is. I'm going to challenge that a little bit, though. I mean, if you think about the big consulting firms, PwC were three guys called Price, Waterhouse and Coopers, weren't they?
Yeah.
So in the professional services, it can work for a period of time. But yes, eventually.
But if it's a trade.
Yeah, it's got to be more than just the people.
Yeah.
Completely agree. Hey, look, thank you so much. That's been really informative.
It's fantastic to start talking about Cash Out Catalyst.
Yep, look forward to seeing it launch. I guess by the time this podcast comes out, it might well be launched. So, yep, cashoutcatalyst.com. And that's Murray Phillips. Thank you very much for your time.
Thank you very much. Thank you.
Thanks again for joining us on Better Business, Better Life with me, your host, Deborah Chantry-Taylor. If you enjoyed what you heard, then please subscribe to this podcast and let us help you to get what you want out of business and life. Each week we release a new short episode which will give a success story and 3 takeouts to put into action immediately. These will help you take your business from good to great. The podcast is also supported by free resources, templates and useful tools which you can find at deborahchantrytaylor.com. I am a trained entrepreneurial leadership and business coach, a professional EOS implementer and an established business owner myself. I work with established businesses to help them get what they want. Feel free to contact me if you'd like to have a chat about how I might be able to help you, or if you'd like to join me as a guest on this podcast. Thanks again to NZ Audio Editors for producing this podcast. See you on the next episode.